Good morning, everybody. It's the 2nd of September. We are Signal Centre Talking Bull. I'm Joe, joined by Steve and Jamie, finally, after a few technical hiccups. Hopefully, everybody can see us live now, I hope. Is it working? Can we get confirmation?
I think we
Yeah?
did.
So brilliant. Yeah. Nice one.
Yeah, we're good. We're there. Right. Finally. Okay, welcome everybody. Friday, non-farm Friday, and promises to be a little bit of more of a volatile session today ahead of a long weekend in the US. Actually, we've got Labor Day on Monday, so you need to factor that into your trading plan for the next few days. So let's get stuck into the latest headlines, shall we? And I've got two on the screen here. Have I got the right one? Yes, that is the right one. So
Yeah.
first up, US ISM inflation pressures ease. The US ISM manufacturing index was unchanged at 52.8 for August and above the consensus forecast of 52. The orders component moved back into expansion territory for the month, although the production growth slowed to a crawl, while inventories posted a smaller decline. There was also a sharp slowdown in the prices index to 52.5 from a previous reading of 60. This was well below the expectations and the lowest reading since July 2020. In terms of the US yields, they continue to increase. We saw the Treasuries lose ground on Thursday ahead of the New York Open, and there was no relief after the US Open, with the 10-year yields increasing to a two-month high around 3.28% before a slight correction. We saw dollar yen post fresh 24-year highs yesterday. The dollar posted a further increase against all major currencies, really, but dollar yen is the one that seems to be getting the most focus, as that hit 140.40 in the Asian session overnight. Swiss inflation continues to edge higher. The consumer prices increased 0.3% for August, with the year-on-year inflation rate edging higher to 3.5% from 3.4%. That sounds lovely, doesn't it? Maybe we should move to Switzerland. And we've got the US jobs report today. The latest US employment report is due. Consensus forecasts are for an increase in non-farm payrolls of just under 300,000 after a 528,000 increase for July, with the unemployment rate expected to remain at 3.5%. So we'll give that a little bit more airtime. A bit later when we go on the day ahead, we'll take a look at the calendar, what we can expect from the major markets that are likely to be impacted by that release at 1:30 UK time. So for now, let's get on to some charts. Steve, can you kick off proceedings, please, on Bitcoin today?
Yeah, sure, mate. So
you need to share your screen.
Let me share my screen first. Here we go. I was in my own little world there, looking at the world of Bitcoin. So this is the weekly chart on Bitcoin. Obviously, we've got the head and shoulders formation. This quite huge formation on Bitcoin. We're down to the really sort of like important support area, and we are testing it. So it's we've had one week which was a bearish outside week, which is a couple of weeks ago. Last week was a continuation of that, straight into this support area, and prices are holding up just around the 20,000 level. You can see by this chart, just trading above that now. So all looks, I mean, for me, I'm still very bearish of it. The real test would be a retest of the 29,000 level of resistance up here, a break of the 17,600 support level, which was the spike low on the 18th of June. And overall, I'm looking at this double top formation, projecting a measured move target towards 12,745. That's my favored plan of action. However, on the short-term chart, there is potential for a little bit of a stall in these proceedings. We've got this bearish flag formation that's got a measured move down to 18,000. However, we are holding around this 19,500 level. We've held it on 3 occasions. Now that gives potential for a triple bottom formation. And you don't see these looking quite so good. Normally you get a double bottom formation with a neckline. Now we've got another double bottom formation. You think 2 and 2 is 4, but it's not. It's 3 support levels hit, and the neckline of the second double bottom formation is very, very close to the neckline of the first. So for me, this is a potential treble bottom. Sounds like a group, but yeah, the measured move target for this would be, if we got a break and a close below there, close above there, would be a move to 21,700, and that would be straight into this resistance that we've got up here. So this looks like a good potential. Maybe we get some decent news out of the non-farm payroll. If we do get plenty of jobs, then the sort of like the worry about going, slipping into a deeper recession may be staved, and we see a relief rally in both these and indices and oil and everything else. So that's the level to watch: 20,575. A break and a close above there on the 4-hour chart should see us retest the 21,800 area. On commodities, a couple of interesting moves in here. First of all, we look at the gold on the 4-hour chart. We saw it get down to yesterday, get down to 16,090, 16,089 before a bounce, and that again is the support area that we've highlighted for. I mean, this is like for most of this year. So really, we could go back to like March or last year, or 2020 rather, but March last year was the sort of like the main bottom here, and we can see this is a really crucial level of support to hold, and we've seen a nice reaction over the last 12-16 hours. So a little bit of a recovery potentially there. Obviously, non-farm payroll leads to quite high volatility in gold, so I would be careful, but buying dips to this level, 1688, 89, 90, it isn't a bad idea. And really sort of like looking at resistance, probably coming in the shape of maybe 1720, 1745, then 1765. They're the levels to watch. I don't know if we're going to get that sort of range today, but normally we get a good sort of $20, $25, $30 range on gold on non-farm payrolls. Silver, similar sort of price action, although this is at a different level to gold. If you sort of compare it to gold, we're probably looking at these support levels around about here. And we're way below that. So let's get rid of this. These sort of formations up here, just a nice little stalling doji candles, indecision, maybe a little bit of a bullish hammer there, but good potential for a little bit of a bounce. 1815 was the previous support, that'll be resistance. After that, really looking at the swing low here, 1872, and up to 1945. They're the levels to watch here. A break of 1757 should open up the downside. Where can we target on there? Probably target a move towards the $17 level. So that's a nice round number to look at. Copper, this has continued in the short-term downtrend. We've broken through support at 341. Further downside, really looking to test 325. And on the upside, we should see a decent set of resistance coming in at 354. And yeah, now hopping over to crude oil, this is a bit more interesting as well. We have got this, I suppose you could call it a potential double top formation. I wouldn't go that far yet, but we've seen this level of support between 86 and $85 holding over the last 5 or 6 weeks. Where it was under pressure yesterday, and it has bounced from there. It doesn't look sort of too much of a stalling formation yet, not on the weekly chart. However, if we do break it down to the daily chart, we have got the potential for a head and shoulders formation. I drew this on the chart yesterday when price was a bit higher, and I said if we can stall in front of the head level, 85.38, and start to reverse there, then there is potential for a nice reversal formation forming. Now again, non-farm payroll, a load of jobs forming could sort of like lead to less anxiety over the recession sort of gathering pace and causing sort of issues where people don't go out, people don't spend on fuel, people go out and buy jumpers and don't spend on heating either. Whatever comes from oil, the sort of like the supply chain or for oil is obviously an issue that may sort of take front and center stage. But today's candle looks really, really positive. It's got off to a great start. Now, in the gun-to-head trade idea yesterday, we can look at that a bit later, but I was looking for further downside, really looking to target a move down to this 86.19, if not further, maybe down to the 85.34. Didn't quite get there, but hit the target, which is really nice. But the reversal we've seen is pretty decent. So I'm really looking at this as a potential bottom. And even for my gun to head, I could fade this and go the other way. We'll definitely get some volatility later on. But yeah, potential for a move up in WTI crude oil. Brent will be the same sort of formation, slightly different levels. If you want the levels, $91 really the level to watch. A break of there could open up the downside. We've seen a nice little bounce from 91.60 and further upside, and really the sort of resistance levels coming in around about the 105 level. Initial resistance maybe at $95, but you know, we get a decent number, we should sort of plow through that. Natural gas is still got this potential for a topping formation, head and shoulders formation up on where we've broken through the neckline. It's an upward sloping neckline, broken through it. We've retested it at 940. We could call that a retest. But yeah, that's definitely one to watch. Not quite sure if this reversal formation will hold, but we'll see. The measured move target for that is a move down to 840. We've got decent support 847 as well, so they're the levels to watch on the downside for natural gas.
Lovely, Steve. Great comprehensive roundup there of the commodity markets and the cryptocurrencies. Thank you very much. Let's move on to FX now. Let's take a look firstly at the dollar index, as this really is and remains the only kind of place that you can get any returns on the upside at the minute, it would seem. The US dollar continues to trump everything else as it stands. Yesterday we had another strong session. So prior to yesterday, we'd been posting a few doji candles, a little bit of indecision as we stall in front of this resistance at 109, 109.30-ish. So yesterday we saw a break and a close above that level for the first time in this, in recent memory. We rallied into another resistance that we've got above at 109.76. Just scroll back to the left-hand side to see where that was last relevant. I may have to flick to a weekly chart. We can see here there was a bit of a swing high back in 02. So pretty significant stuff. The next level we're targeting on the upside is that blue line, which is the 78.6% fib level from the highs that we posted in dollar index in 2001 down to these lows that we posted in 2008. So this is, you know, a significant amount of time that's passed. We are approaching the 78.6% fib level now, which should provide potentially some resistance for the dollar index. But all in all, the trend, as you can see, remains very strong. No signs of this slowing down. We could probably even draw a tighter trend line, something like that. And you know, it looks pretty strong, really. I can't see any major selling taking place at the moment. While we're in this kind of phase that we're in the markets and where people are concerned, this seems to be where people are heading to in the form of a safe haven to try and preserve capital. So no signs of this slowing. So let's take a look at what other markets the dollar is impacting. This is the Aussie dollar. We can see trading in a downtrend, as you'd expect. We did see a little bit of relief in this corrective channel, but we broke to the downside and prices have continued to move lower. And we're slowly approaching this 50% fib level in yellow. We had a look at this level back in July, which then prompted that rally to the upside, but we're approaching it once again. And I think the low that we posted in July will be the key test on the downside. If prices break below that, then we're starting to eye up the 61.8% fib level, which is all the way down here at 64.16. Looking at euro US dollar, that reversed quite sharply yesterday. We had seen a bit of relief in the euro in general over the last few sessions. As we can see here, it's holding up relatively well versus the US dollar compared to other currencies anyway. But yesterday we posted a bearish engulfing candle and we came very close to testing these lows that we posted on the 23rd of August. So a break to the downside here just really confirms what we already know, that we're in a downtrend and we are seeing a sequence of lower highs and lower lows. The next major move, major target on the downside is all the way down here, which is at 95.96. And if we scroll back to the left-hand side to see when we last saw that level, we have to go some way back. Again, going to have to get the weekly chart up. And as we can see, here's a decent support level from back in 2001. So pretty significant levels that we are potentially about to test on this currency in the short term. Taking a look at cable, no relief here whatsoever. As we just said, the euro seemed to hold up at a key support level. Not been the case with cable. We continue to see weakness in sterling. The backdrop that we've got at the moment with the political situation and the confidence in the overall economy really is seeing sterling get a bit of a whack really against most currencies. We've broken down through that support at 117.60 and we're heading down to this next level of support at 114.09, and that I believe is the low that we posted at the height of the pandemic, so back in March 2020. Doesn't seem to be anything slowing that down at the moment, so it'll be interesting to see what sort of reaction, if any, we get at that previous low point that we hit back in March 2020. Looking at New Zealand dollar versus the US dollar, this is an interesting one today. It's bang on a key support level. So this was the previous swing low that we posted in July. Prices have melted lower really into this level and so far seem to be holding. So yesterday we touched it before closing just slightly above it. This morning we have printed a marginal new low, but the candle at the minute is back to the point roughly where it opened. So is that going to provide some support potentially in the short term and encourage the bulls to speculate on a move higher? If that level fails to hold, then obviously we have to start scanning back to the left-hand side to see when the next levels of support come in. This was the pandemic low on New Zealand dollar versus the US dollar, so some significant distance for that to travel before we get to that level. What we can also do is have a look and see if there's any fib levels around here that offer any encouragement as well. Let's go to the high. Let's move that there. So we're already through the 61.8, the 78.6 is at 58.96. So that for me would be the next level to target on the downside if this support level here fails to hold. Take a look at some of the euro currencies as well. In fact, sorry, one more dollar currency. We spoke about it in the headlines, and that was dollar yen. That broke through resistance at 139.38 to hit new highs. Posted a really strong, impulsive candle yesterday, closing at the highs of the session. As things stand, it's very flat. We are down 0.01% or flat now on the chart. So a bit of indecision here. Probably doesn't know what to do with itself now that it's up at 24-year highs. How much further has that got to go? I'm not sure. We have heard speculation previously that the central bank in Japan may be incentivized to try and step in with some form of intervention on this to try and strengthen the currency, because obviously it's exceptionally weak against the US dollar, as we can see at the moment. I'm just going to take a look at some of the euro currencies. Euro sterling had a really strong move recently. Again, we mentioned this strength in the euro that we saw and the continued weakness that we've seen in sterling. That rallied into a 78.6% fib level before reversing yesterday. Up again today, 0.25% or so. Has that got the legs to continue moving higher? We'll have to wait and see. But that's obviously had a pretty decent run in the very short term. Some of the other currencies looking pretty weak against sterling. Canadian dollar trading in a long-term downtrend, but more recently in a bearish channel. No signs of that slowing. We took out support here at 153.50 and we closed at new lows yesterday. So no sign of that slowing down either. So I'm going to move on to the indices and start off with the ASX 200. That closed lower yesterday. Another big move to the downside, fast approaching support at 67.57. We've got this yellow line here that we've highlighted, and we've also got some short-term trend support, which roughly comes in at the same level. So it'll be interesting to see if we get any speculative buying interest at that point. Overall trend still remains bearish, so that is the bias for now. Looking at the DAX, closed off of the worst levels of the session yesterday. We got down as low as 12,600 before closing quite substantially higher, really. Posting a doji as things stand at the minute, a lot of indecision. Maybe that's to do with the non-farm payrolls later and waiting for some direction for that. But the major support for this is at 12,440. If that fails to hold, then we're looking for a move down to this 50% Fibonacci retracement level. And as you can see, highlighted by this black line, the dominant trend still remains bearish. Nasdaq. So yesterday, this was quite interesting. It's fallen into a support zone that we've got highlighted on the chart. So we've highlighted a 61.8% fib level here in red. That's from the swing lows that we posted in July up to the swing highs that we posted in August. The 61.8% fib level appears to have done a decent job. And as one of our viewers has pointed out on the TradingView stream, it's posted a dragonfly doji, which we've seen selling all the way down to these lows here at around 12,000 before the buyers stepped in. We closed pretty much where we opened, and that indicates a pretty decent turnaround. Now, typically, these kind of candles aren't wholly reliable by themselves. You generally need a bit of a confirmation candle to go alongside it to confirm the direction. So ideally, we'd be looking for a decent candle today, a nice green candle that would signify maybe a short-term turnaround in that. And certainly there is a reasonable amount of support here. So it all seems to be looking quite nice on that front. But we do have this big non-farm payroll number today, which could turn the tide pretty quickly. So a bit undecided on that. Overall trend remains bearish, so I'd prefer to side with that. However, we could argue that we are in the formation or trying to form some sort of bottom. We could say maybe this is a left shoulder. We could say this is the head. And we could say that this is the beginnings of a right shoulder. So a substantial amount of work needs to be done before we can confirm that that is a bottom pattern. We'd need to break above 13,727. So it's highly speculative at this point. But the fact that we've got this nice looking candle that was posted yesterday into a 61.8% fib level may suggest that this is a prime area for speculation. But of course, you need to make sure you've got stop loss on these trades, because if we take out yesterday's low, then we could head lower towards that 78.6% fib level. And you don't want to be carrying that and worrying about that over the weekend. And especially as it's a long one, it's Labor Day in the US on Monday. So, you know, there could be an anxious wait for the markets to reopen again on Tuesday. S&P 500, it's a similar situation. You can make out an inverse head and shoulders here as well. Posted a decent looking reversal candle yesterday, closed actually up on the session after posting lows all the way down to 3905. Seems to be holding this line of support at the moment. Has it got the impetus and the follow through today to post a green candle in conjunction with this? That would add a little bit more conviction to the bulls. But we need to see a little bit more. And again, that non-farm payroll number is going to be all important. Finally, the Ftse 100. Previously, this has been holding up quite well on a relative basis compared to other indices, but we've seen a really aggressive sell-off in the last few days. Confidence really seems to be drying up on the UK side of things at the moment. Quite a big red candle posted yesterday, not really going anywhere today. We've got support down here at 6,966, which is the swing low from June the 20th. That would be a potential target to look for. We can also add some fib levels here. We've got 78.6% fib at 7,097. So that may provide some temporary relief, but this looks very much on the back foot at the minute. And I wouldn't really want to be speculating on that at the moment until I see some more evidence of things stabilizing. That's it from me.
Joe, you're right to quickly have a look at pound yen. We've got a little request for.
Yeah, of course.
Just have a quick look at that. Thank you.
So we spoke about this, I think, maybe earlier in the week or late last week.
Yeah.
And the chart for me is a little bit choppy at the moment. So if we just scroll back and get a bigger picture on things over the longer term, we can see it is trading in a really nice bullish channel. And that's despite the fact that we just really slammed sterling being a really weak currency at the minute, but it's not as weak as the Japanese yen. That continues to get an absolute hammering, and that is, threatening. The Japanese central bank. They have spoken about some sort of intervention. So if that does occur, then we could see a pretty substantial rally in the Japanese yen at some point, and that is likely to catch everybody by surprise if and when it does happen. If we take a look at the sort of shorter term price action, we can see that it's kind of contained within a bit of a triangle pattern at the minute. So we've got this trend line here, which highlights lower highs, but we seem to be finding some support in this band of price action, kind of between 159.98 to 160.60. So if you are looking to buy and want to continue trying to play this triangle kind of pattern, you probably want to be looking at getting long somewhere into this zone here, where there seems to be a decent bit of support, and looking to play the short-term bounces, I think. But obviously, naturally, in a triangle pattern, these bounces are becoming shallower and shallower. And in order really to bank on a bigger move to the upside, I think what we need to do is take out this triangle pattern and actually see a break to the upside of this before we can really get too excited about it. But it seems to be, from a range trading perspective, or if you're a scalper or really looking for very short-term moves, quite reliable at the minute, in that you can see prices moving down into this zone, and typically that is attracting buying interest. So maybe you want to continue playing that for now, and yeah, see if you can extract some pips from it. But overall, keep an eye on this triangle pattern would be my advice. I'm allowed to say advice? My thoughts, my opinion.
Yeah, gotta be careful there.
Yeah, so hopefully that was helpful.
Cool. Thank you, Joe. I will dive into a couple of stocks. Let me just put up my screen. Here we go. So starting off, we'll look at our biggest gainer and loser of yesterday. Our biggest gainer being this FMTX, or Former Therapeutics Holdings, up 51%. And that's off the back of this news of Novo Nordisk to acquire Former Therapeutics in $1.1 billion deal. And that obviously sent the shares flying. You can see at the bottom, as we usually do with this kind of news, huge volume, 43 million shares traded yesterday, up 51%, so a really nice move there. On the flip side, we've got our biggest loser, which is this Okta, part of the Nasdaq, this one down 33%. Again, if you kind of look at the trend, you can kind of tell we are seeing these lower highs and lower lows, and you got to be careful buying in that kind of a trend. You can get caught out, especially around earnings, which is why this move happened. If we have a quick look as what the details are about it, shares of Okta plunged nearly 34%, the worst performer on the Nasdaq following the company's fiscal second quarter results. So yeah, a pretty huge move down there, 33%. Checking out the heat map for the S&P 500 yesterday, not a bad day overall. I think we started off with some decent selling, but then it bought up towards the end of the day. Apple, Microsoft pretty much were flat. Amazon was up a little bit. The real big news, Nvidia was down 7.67%, and AMD was at one stage down pretty hard as well. I think those two were both in the news, so we'll come on to those in a little while. In terms of sectors, health technologies performed really well yesterday, and we'll have a little look at some of those as well. And energy was down pretty hard, so yeah, all in all, not a horrible day, not as bad as we've seen recently. We'll start off having a quick look at Apple, and we put an idea out for Apple. I think we discussed this earlier this week, how we're coming to this nice confluence level here. I'll pull up the 50 period moving average. That seems to have held quite nicely for the moment. Price did dip below it yesterday, but bought back up. We didn't actually quite get a fill according to this chart, but if anyone did manage to see that, it'd have started off quite nicely. We got this 50% Fibonacci retracement as well. We've got this previous support level that goes all the way back to January. So yeah, quite a nice little confluence area there. And so far so good. That's quite a positive looking candle, but I'd like to see some follow through today. And as we know, the jobs numbers that come out later, that could really dictate where this goes next. So keep an eye on that. AMD, this was one of the ones that was down pretty hard yesterday. We've kept a close eye on this for a while. I'll move this 50 period average out of the way. It looked like we were really starting to get a positive move, breaking above this downward trending resistance. It looked like a potential bit of a flag happening here, but this has really fallen off pretty hard with the rest of the market. We have posted this Dragonfly Doji here at the 78.6 fib, which is definitely a positive sign. But as Joe said, it's all about the follow through the day after, so we'll be watching this closely and how that closes today. This was in the news for something, wasn't it? I think let me see if I can find it. I don't want to guess the news. It's not a good thing to do. Let's have a look. Here we go. Shares are trading lower after the US government imposed export restrictions on chip makers. I believe that was also the case with Nvidia, so I'll quickly shoot over to that. So yeah, this was down, I mean, down a lot heavier than AMD, and you can see the volume is really picking up now. A big gap down yesterday, closing 7.67% lower. Not a lot to love here for Nvidia at the moment. We had this really nice run up through COVID. I'll bring it out to weekly charts so we can see it a bit better. So you can see this is the real stage 2 run up we've had here. It looks like a pretty fast stage 3, but you can see now like the volume, it's all red volume weeks here, which suggests that the big names are unloading their positions, and certainly not positive price action this last few weeks here. The next level of support for me on this, we've got a little bit kind of down at this level here at 118, and we are actually kind of still at this pretty key support here of, where we at, 130. Oh, there's too many red lines, I can't see. But yeah, so that's why it's kind of looked like it tagged that and moved up pretty nicely, but this certainly not looking so great at the moment. We'll keep an eye on that today. What else do we want to look at? Amazon and Apple seem to be moving pretty similarly at the moment. We've got the same type of candle really here. Another one we did put an idea out for, buying Amazon at this 50% fib, and we've got the 50 period moving average, which again held up quite nicely. So yeah, similar type of price action, quite a nice confluence level there, this previous resistance, which has so far done a pretty good job at becoming support, but we'll see how that develops into Friday's session. Looking at that from a weekly perspective, if we get a bit of follow through from the move we saw yesterday and we can close even around the week's open, which would be at 129, which to be honest doesn't seem out of the realms of possibilities, not too far away, then that would be a really positive looking candle. Again, it's all about the follow through though, but I think if we do get some buying pressure today, that could signify a bit of a move higher into next week, so one to keep an eye on. Again, CMC here, this is Commercial Metals Company, performed really well over the last kind of, I don't know, month or so, 2 months, but has really been hit pretty hard along with much of the market. But we've had a few gaps down and the volume's picking up, but this for me was one of the stocks I thought, you know, was holding up quite nicely, but again hit pretty hard over the last week or so. CrowdStrike, again, we put an idea out for this. Doesn't look like we'll get a fill. Well, maybe we will, maybe it will buy back up, but an aggressive sell-off again after earnings the day before yesterday. Not looking so good, aiming to kind of target these previous lows down at 130 here. GME keeps on selling. We've got earnings coming up for this on the 7th, so one to keep an eye on, but it's just ploughed through the 61.8 fib. Not looking good here at all, actually. We've got a few gaps down. I'm not loving it. I'm sure at some point there'll be a bit of buying relief, but certainly for me this is not looking nice at all. Moderna had a really good day on the positive side yesterday. Not quite an outside candle, but we're looking pretty good. It's my favorite type of candle, which I'm not even going to try and say. I've got a mental block against saying it, but I'll call it a bullish looking candle.
Go on, have a go. You've got to have a go, Jamie. What is it? What's that candle?
Marabuzo.
Well done.
Is that it?
Yeah.
Nice. There you go. I'm learning.
I prefer Marazubo.
The thing is, the Z and the R and the B, they just kind of in my head, they mix up, and it's just get something out that starts with an M and ends with an O, and the rest can figure itself out. But putting my struggles to one side, this has been a really nice candle after a pretty aggressive move down. You can see the volume above the 20 period average and closing right at the high of the day, so that is quite a positive looking candle there. Let's see if we get some follow through on that today. What else do you want to check out? Ftse, similar kind of note. This was right down at support, so we noted that it kind of went through this previous support level around here, but the secondary support has seemed to have done a pretty good job so far. Volume a little bit above the 20 period average, but not quite as convincing as Moderna is, but this is at support, so potentially the kind of thing I sometimes look for when I'm writing an idea is a little bit of a move higher, an attempt to get back low, and then I find, I mean, this is just for like really short-term trading, not intraday, but like kind of swing trading. You can get some really good risk reward, because when I set my ideas, I like to know really quickly if I'm right or wrong. So if you're looking for a buying opportunity here, and price comes down below this previous level of support that we've got on the left side, you'll know very quickly if you're wrong, but you can get some really good risk reward out of that. And I mean, if you're really crazy, you can target these prior resistance levels, and I mean that's obviously 10 to 1. But you can also, I mean, even if you go for a 2 to 1, which is the minimum we look for, that seems like quite a decent little area for a bounce. And you know, in markets like these, when we put out ideas each day, that kind of thing for me gets you that decent risk reward, and that's what I'm always looking for. So yeah, just a thought there. Maybe that will be something we put out today. Snapchat moving higher again, off the back of the news yesterday that's restructuring its business and laying off 20% of its workforce. I guess that's a good thing, sadly. For the share price, up 7% yesterday. Volume starting to pick up as well, so potentially a bit of a bottom here forming for Snapchat. I don't think there's too much else I wanted to look at today. Oh yeah, look at Rolls Royce, that's struggling. Look at that volume, gap down, closing near the low of the day. That is not looking healthy at all. Anything else going on here? I don't really know why I keep on looking at Cineworld, but look, it's kind of bounced up actually, 15% up today. But it's still filing for bankruptcy, so it's like I don't know how much room there is on upside when you know that's looming in the background. Other than that, all Vector's down this morning. That resistance seems to have held up pretty well for the moment, possibly returning back down to this 100 pence level. That would be where I'd be looking to perhaps get long on that. But yeah, all in all, not a bad day yesterday, but it's all about the follow through today, and with the big news we've got coming out a bit later, that will be really what determines the direction of the market for, well, it's a big day. It's a big day, let's put it that way.
Cool, lovely, thank you, Jamie. Okay, let's take a look at the gun to the head trades then from yesterday. So just to remind everybody what it is we do here, we pick 3 trade ideas each day live on the stream. They're highly speculative. We're just trying to see if we can make some returns between now and 9 o'clock in the evening when these trade ideas will expire. Each of the ideas that we come up with must have stops and targets. They must have risk reward ratios in excess of 2 to 1. They're all placed at market, and if anybody wants to check them out, you can do so via our trading view profile, signal_center. You can see here all of our trade ideas from yesterday were published, and you can click the play button to see how they played out. So let's have a quick look at those. So Jamie, yesterday you were selling Ethereum, and if we click the play button, we can see that sadly that was stopped out. So that is the way the game goes. Looking at my idea, I was going short of DAX, a little bit of a breakdown on that yesterday on the 4-hour chart that was trying to capitalize on. Didn't work out either, just about stopped out, hasn't really gone too much further beyond that, so still potential for downside there, I think. And then we come on to Mr. O'Hare, who can't put a foot wrong at the moment. He was selling WTI crude, and this was his 4th consecutive winner, making 7.75 R in the last 4 trades. Hit target again on that one for a 2R win. So, Steve, pressure is building on you now, mate. 4 wins in a row. Everybody's hanging on your every word. Have you got us? You got another winner up your sleeve today?
Well, I'm just looking at that. That was pretty lucky, wasn't it?
I don't know. It looks like it was pinpoint accuracy to me.
Well, that's the thing. I didn't sort of like put thing to think about. I didn't put a huge amount of thought over the exact level. So you can. It just shows you that in this trading world, how it's like anything. You know, you need a bit of luck sometimes to sort of like nail something. I could easily put the target a little bit further away, and it could have recovered. But yeah, I'm going to go the opposite way today, WTI crude oil. I feel like we've had a bit of a battering since the 30th. We were trading up at 97.24. And over this week, we've had this sell-off basically on the back of concern over recession building and demand for crude oil dropping off. So, yeah, we've got non-farm payroll. We could easily get a spike either way, dependent on the result, obviously, of non-farm payroll. But I feel there's maybe all the markets that we've just gone through this morning with these dragonfly dojis, which was highlighted by Future Investor on the TradingView channel. Thank you for that. And yeah, it seems to be across the board. So it feels like we're in for a bit of a technical bounce. That's how I see it. I think it's short-term bounce, but it's yeah, feels like it's technical. Feels like everything's pointed the same way. Supply and demand. That's what it's about. So anyway, I was looking at buying this. I had a level in at 88.14, but as you two have waffled so much, I've got to move that up now, and maybe the stop has got to be a little bit further down. So just to make sure the risk reward is right, getting in here at 88.43. I'll have the stop 87.23. Gives us a little bit of room from this swing low on the previous hour's candle at 87.51, and targeting a move. Yeah, well, you know what? Can I get it below here? Probably not. Yes, I can. 2.0321. So I'm going to target a move just to this where we saw the swing low just below there, and that'll be in front of further resistance at 91.27. So targeting a move to 90.86, getting long at 88.43, stopping at 87.23. Make sure you get a stop in there. That's vitally important. Yeah, looking for a little bit of a turnaround on this bad boy after the sell-off this week.
Nice. Good luck, Steve. Hopefully you can make it 5 out of 5. Jamie, what do you got for us today?
I'm taking a look at Ripple today. I've been looking at cryptos all week really. Had mixed success, but what I'm seeing here is Ripple's coming to this resistance level, which we've tagged twice already. We kind of hit it here, had a little bit of a sell-off. We've had another go, and this hourly candle is what I'm most interested in here. We're at resistance and we're having this really negative bearish looking candle. We have still got 15 minutes before it closes, but so long as it kind of closes around this level, that for me could indicate a bit of a turnaround here. It's kind of starting to get away from me, but I can still get decent enough risk reward. I'll turn on my stop a bit. So looking to sell Ripple into this previous support level here, selling at current price, which is which one of these is it? 0.3320. Just moved on me. Is that right? 21. I think I was looking at the wrong one. Having the stop just above this recent swing high, you know, I kind of feel there could be some dodgy business. They could try and move it a bit higher before the set off. I'm going to give it a little bit more room. Risk reward takes a bit of a hit, but still over 2, which is what we look for. So we'll keep the stop at 0.3364, and like I say, targeting these lows down here at 0.3225. And if that does play off today, that gives us a nice 2.23R risk reward. So a little bit conservative, but yeah, I'm liking where this is at and the candle that's forming around resistance. So yeah, selling Ripple today. Okay,
cool. Right, final trade then. I'm looking at Euro US dollar going headfirst into the non-farm payrolls with this. So overall, as we discussed many times on the daily outlook, it looks very bearish. But over the last few hours or so, we have seen a fairly substantial rally actually. So we bottomed out at 99.11. We've rallied over the last few hours into a 50% fib level, just a very short-term one from the highs that we posted on the 31st down to these lows that we posted yesterday. So looks to be maybe acting as a bit of resistance. It is highly speculative, of course, because we've got these non-farm payrolls later, and naturally Euro US dollar is one that is quite impacted by that. So I'm going to have a go at selling this at current price of 99.92, just in front of parity. Stop loss at 100.24. Targeting a move down to 99.12, giving me 2.47 as a risk reward ratio today. So that is my trade, which will be published very shortly to the TradingView profile. If anybody wants to follow the progress of that throughout the trading day, please feel free to do so. Okay, now moving on to the day ahead, we have had a question, somebody asking us to show the Acuity calendar and the effects of non-farm payroll on various asset classes. So Acuity, our parent company, have designed a beautiful looking economic calendar. You may have seen this previously if you are working with or trading with some of the brokers that we're working with. This is the economic calendar. See if I can just scroll it in a little bit to make it look a little larger on the screen. That'll do. Okay, so we've got the US employment report today. This is the big one that everybody's looking for. We have a forecast of 318,000. The previous was 528. So this is the key number you want to be looking for. Probably the quickest way for you to get it is on something like Twitter, where the news is fairly instant and you can get that coming through in real time. Anything above would obviously be good. Anything below would be worse than expected. So keep an eye out for that 318 figure. We can see here the average hourly earnings as well as a percentage, so and an explanation of what non-farm payroll is as well. Now, typically this impacts a number of assets, most notably those linked to the US dollar. And what we can see here is a history of the US employment report going back a number of quarters to Q1 2022. We can see here that the forecast versus the actuals tends to be quite wide. So it just goes to show why this creates volatilities, because it's a really hard number to predict. So here we can see the latest expectation. But what we also get on here on the right hand side is the potential range for these assets over the last 10 events. So it's an average of what's happened. And as we can see here on the hourly time frame, typically an hour after the number is released on Euro US dollar, we see a range, a positive range of around 23 pips. So typically price moves higher by around about 23 pips in the hour after non-farm payrolls. Now that wouldn't be very good for my gun to the head trade idea, I will admit, but it is only an average and it isn't a guarantee, but it is a pretty good indicator to give you a bit of an overview of what sort of ranges to potentially expect on assets ahead of that. So this is Euro US dollar. We'll take a look at a couple of others. Let's take a look at cable.
I think last month's is quite interesting though, Joe. That last month's number. I mean, you can see the sort of like the difference in the
so it came in well above
the
expectation.
And then we got like
saw, that's a percentage, so a 0.68 percent range.
It's about 70-point range.
Yeah, it's pretty substantial, right? It's easy to work out at the minute, isn't it, with euro dollar parity?
Yeah.
So yeah, that's that is pretty impressive, and obviously that was a really big beat there that we saw in the previous month. And to be honest, the last 4 months have all come in above expectations. So are we to expect that again today? And if so, maybe we can think that there's going to be a decent move to the upside in Euro US dollar. Let's take a quick look at cable. The range looks as though it was a bit larger here. So 33 pips, an even bigger move last month, 0.82% range on cable after the non-farm payroll number. So that's quite interesting. In terms of news sentiment at the moment, this is news sentiment 1 day before the event. So this is some really clever technology that Acuity have got. It's called natural language processing. So the idea being that we can actually visualize the news. So rather than trawling through multiple articles to try and get a feel for the underlying sentiment in these assets at the minute, we've actually got some technology that reads all those articles for us in real time, can summarize those articles and produce a bullish or a bearish score towards those assets. So at the moment, the news is overwhelmingly bearish towards cable. 89% of the news articles that we've read suggest that the tone towards cable is bearish at the minute. So that is maybe something we want to consider as well. Let's take a look at dollar yen. Obviously, that's been well spoken about, up at 24-year highs. The range is even larger here. So in the last reading for non-farm payrolls, on the average for the last 10 events for non-farm payrolls for dollar yen, we've typically seen a move as much as 50 pips in the hour afterwards, and that has been to the upside more often than not. In the last reading, really big range, and over a 1% move or 1% range after the non-farm payroll number. News still remains bearish overall, not as bearish as cable, but still overwhelmingly bearish on that. Let's take a look at a couple of indices. Let's look at the Nasdaq. Again, bearish sentiment. 81% of the articles are bearish. The range last time was 1.35%. and the hourly move, so the move an hour after non-farm payrolls, around 0.6% on average over the last 10 events. So that's something to keep in mind as well. And finally, we'll take a look at the S&P 500. News not as bearish here. 59% of the news is considered to be bearish at the moment. So certainly a little bit more towards the center line than some of these other assets that we've just looked at. Range over 1% last time. Typically around 0.4% is the range that we get in the hour after the non-farm payroll event. So hopefully that helps shed some light on what to expect a little bit later today. Any further comment on that, guys?
No, all looks good.
No, good.
Cool. So yeah, it is pretty much front and center today. US employment report, the only high impact data point that's due out today. As mentioned, it is a holiday on Monday in the US. So typically the bond markets, bond markets stay open, but the equity markets shut? Is that right, Steve?
Yeah, that sounds right.
Yeah. So likely to be very light trading, which doesn't come at a great time, to be honest. Obviously, having non-farm payrolls today and then having 3 days before we can really react to that in a sustained way. So there's going to be maybe a little bit of anxiety ahead of the reopening on Tuesday. And then we're straight into central bank policy decisions as well. We've got the Reserve Bank of Australia, we've got the Bank of Canada, and we've got the ECB next week. So that could be another tasty week next week on the markets.
Excellent. I'm going to try and be there. I'm out in Barcelona next week, so I'm going to try and log in on my laptop.
Okay.
Don't know how successful that'll be. But
give it a go.
Yeah.
Absolutely. Okay, great. Well, everybody have a fantastic weekend. Thanks for tuning in. We hope it's been useful, and we will be back on Monday. Have a great weekend.
Cheers.
Bye-bye.